All right, all right, all right, all right, all right. Now you listen here, okay? All right. So what we're gonna be doing is going over a trade. I'm currently challenging myself to go from $5,000 to 200K. Now this challenge has been terrible. It's been really hard. There's been a lot of blown accounts. Today I want to go over my newest and like more than likely, I would say this is my strategy. This is for sure the way of the righteous. So, we're going to be going over a trade that I took on my account that I won. And I'm going to be dissecting that trade and what happened. So, first things first, my strategy consists of a 100 EMA, a 200, I think, 200 EMA, and a 500 EMA. Now, the first thing that is in my strategy is a cross of the 100 EMA. So, whatever way it crosses, if it crosses up, we're looking for a retest of a higher low and stuff like that. If it crosses down, we're looking for lower highs and stuff like that. And with that main strategy, we're looking for lows and highs. Everything else doesn't really matter, but once you get a low and a high, that's kind of where you start. So for this trade, we got in, well, we started with a high. A high. And then with that high, we also saw that we had a low to a high. So a low to a high, like I said, is going to cross up the 100 EMA. That's your first indication that it could possibly be an uptrend if it's a low to a high. So what you're going to do is wait for those confirmations. With this one, we got in at this high. So we are trying to see if it creates a low or a higher low. So with it, we see, okay, this high actually created a higher low under the 100 EMA. So it crossed down. So now we're thinking, okay, this could be a sell. We also have our indicator over here. I think my freaking camera is blocking it, but we have a candle consistency, and it shows that, yeah, everything is looking bearish. So we had this high to our higher low. The next sign, I wish I had my phone to see. The next sign is once we get a higher low that closes under this black line or this red line. Once a higher low closes under those is a good sign that it's going to be coming down. So let's see what happened. We didn't get in this trade for a long time because I was late to it, but I'm just going through the progressions of it. So we had a higher low, close under the black. Then what happens? Still under the black. So our next thing that we're waiting for is, can we get a higher low that closes under the red? Or even a low, sorry. We either want a higher low or a low that closes under the red or black. And look what we got. So the first thing you're going to see is a higher low that closes either under the black or red. Once that happens, you want to get a low. Once you get a low, then you're waiting for a higher low. Then you're waiting for a lower high, sorry, that is rejected off of a key level. For us, our key level would be our black EMA and our red EMA. And just to double check with that, you're going to go through your daily, double check. Our daily's at a low. Our 4 hour is at a lower high. Our 3 hour is at a lower high, and our 2 hour is at a lower high. That also shows us we're currently in a downtrend or a down move. So what are we looking for? Something that is going down. So we got our high to our higher low under the EMA. Then we had a rejection here. Anytime you get rejections, you're looking at what it does after. Rejection of the 100 EMA to a low that came and crossed under this red EMA. See how this low didn't cross under the red EMA? You can have a black higher low under the black EMA or red, but the low, you preferably want it under your red EMA or deep, like close to your red EMA. So you got that. So now what we're waiting for, if you know your progressions, you know that a low is, if you're going down, is going to make a lower high and then a lower low. So right now we're waiting for a lower high. The next step in this strategy is to get a lower high. Like I said, rejects off the black candle, or if this low pushes all the way down, it rejects off the red candle. Either way, or it's like somewhere in the middle of those two. As long as it's not above your black candle, then you're good. So we get a low. Let's actually slow this down a little bit so we could go through it. So we got a low. Now look, boom, here we are, rejection. So we're getting rejections that we need. And if you got in around there and you see that, you could see that that's a continuation pattern. But I didn't get in there. Like I said, I missed all of this and I got in once a indication that it was going to keep going down was formed. So that is the lower high. So we're here at this low. Another rejection, good sign. But see, that's your target area. You're looking for the rejection areas to get in. So it's either this or it's a lower high. But either one is going to reject. If you get in here, you're perfectly fine. But just know it probably can come up and create a lower high if it is bearish. So you're here, low. Now what you're waiting for is your lower high. Still no lower high. So you're waiting for it, waiting for it. And these, if you're wondering, these yellow kind of squares are my consolidation squares. So I know during this time, it's consolidating. For me, I don't know why the fuck, but I usually always get in when it's consolidating. And so you just kind of got to wait that out. But just know consolidation is these yellow squares. So we're still at a low. Now we have an even bigger indication that we are completely bearish because we crossed the orange EMA, the God's path EMA. That's what the orange is. So once you cross the orange EMA, you cross down or up. It's the best way to know that you're going to keep going that way. This is a 500 EMA. So to cross a 500 EMA takes a long time. And if it matches, if it happens to match with your higher time frames, which this one it does not, but if it does, here you go. Your daily time frame is way below your orange EMA. Now your orange was at the top, so that could weigh on some significance, but it's still under. But on the current time frame, if your candle is under the orange EMA, that's like your best sign. So we missed all of this again. We literally weren't able to get in until I think it was like right here. And at that point, it's kind of like it's a good area to get in, but it's not the best. You know that this low is going to create a lower high. And this lower high could possibly be higher than here. So why get in early? Be patient, wait for it. Wait for your lower high. Boom, There it is. And the thing you're going to wait for with a lower high once you get it is you want to enter on the close of a green candle, a or a bullish candle. You want to enter on the close of a bullish candle because you would be at the highest point. So let's wait for a bullish candle to form. If one happens, there it is. There's another bullish. So what you're going to do is enter here on this bullish candle. Now, second part of this confirmation strategy is, okay, you are now in the end of a move, kind of, according to where you're at currently. So now you're thinking about this ending with a lower low. You're not thinking about it ending with a lower low, restarting and continuing to go bearish. All you're thinking about is it ending with a lower low. The way you would be thinking about it ending with a lower low and continuing is if you already had that lower low and you already had this whole confirmation, then you're probably looking at a continuation under the orange EMA and all that. You know, you have bounces up, down, then you're looking at it. But right now, we're just looking to get in and get out. So here we go. Maybe we could save this for another time, but this is my take profit stop loss. I know it looks crazy. I know realistically, let's say we had crazy capital. Say we're on NZD JPY. Let's say we had $25,000. Let's just say. And you're gonna look at it and be like, what the heck? 25,000 units, sorry. We're risking $6,250 for 3,250. And I know that looks crazy because you're like, why are you risking so much? But the only reason you're risking so much is because you want to give your trade time to breathe. It doesn't have to be that dramatic. I might like lower this to, especially if you're on a funded account, you don't want to get, you don't want to blow your account from drawdown. I've done it a lot. So what you want to do is you want to push your stop loss a little bit above your 100 EMA. For the sake of this, let's just put it all the way up here and keep it at my given ratio, which is a 0.52. Crazy stop loss. The thing with this though, it's so hard for it to get up here. Like if it gets up here, you completely messed up and probably should have never entered on the trade. But for it to get all the way up here, it doesn't happen. What you're waiting for, the key with this strategy is a reaction. What you're waiting for is boom, it could get all the way up here, like here. Let's say it was here and then got up to here. You're waiting for a quick reaction. Now it's gonna start going boom to boom to boom to boom to boom to boom to boom. Yes, that takes a while, but the reaction to go from here to here is way quicker than going from here to here. So, in short, that's the strategy. That'll be talked about later, but we got in here. Why? Because we had a confirmation of us crossing down the 100 EMA. We created a higher low under the 100 EMA. We created a low shortly after that, which in turn turned into an even bigger low. And then we crossed the God's pathway EMA, the orange EMA, and created a lower high under it. Those are all signs. We also have our indicator showing us across multiple time frames that we are currently moving down. Lower high, lower low, like all of them are moving down. So we're going to get in. You're going to get in for this reaction strategy ratio. You know this has to make a lower low. So also, if you don't want to do that, I mean, look at that. You're already out. But if you don't want to do that, this doesn't really have it. But you want to target a recent low. You want to target past a recent low. We know we're going to get a lower low. So if you're scared, you could target right here, past this. And look how fast that would have been. And that would have been $3,000 right there. So you're targeting a recent low, moving past a recent low, or you're using your ratio, which is a 0.52, and you know it's going to hit a lower low. And with this, look, now what we had with this was continuation. The reason I know this happened was because I won this trade. So I'm kind of telling you in advance what happened. Now, with this lower low, you would say, how do you know, like, what about the next trade? What if I got in here at this lower low? How do I know it's going to keep going down? Well, you are waiting for your confirmations. Low, lower high, higher low, under the EM. Like, you don't even want a higher low at this point. If you get a higher low, get out. It's probably scary. A higher low in the beginning off this high makes sense because you have to have that pull back to shoot down. So with that, it makes sense. So with this, if we got in at this lower low, we'll be waiting for a lower high. Again, a lower low is going to create a lower high, which is going to create a lower low, and so on. If you're in a true bearish trend. And there we go. The second one is created. Now with this, if you were to get in on a lower low, you're at the second part of the strategy, right? Kind of around this lower high area. You're not at the first part, which is here, the higher low under the EMA. This is the second part, the continuation. And that is given if you are under, you get rejection under a certain area, preferably the orange, you create a lower high. Or you get rejection off it and you just start building down. And then your second confirmation with that is you're currently at a lower high area. You want to be at a real legit lower high. Everything else matches up. You're at lows. See now here, 2 hour, you're at a higher low. You could think and be like, oh, this is a reversal. But you want to look at every time frame. 3 hours, a lower high. 4 hours, a lower high. And daily is a low. So why would you be worried about a 2 hour higher low when you have very, very reliable time frames showing lows or lower highs? Doesn't make any sense. You want reactions, but you want reactions that are strong, not just quick spurts. So that sounded crazy. All right, so what you're looking for now, you're at a lower high. Again, you're waiting for a rejection candle, a bullish candle to close to enter on the lower high. Make sure this lower high is under this EMA and all that good stuff. Do we ever get the rejection? If you don't get it, you don't get it. There's a rejection. So why not get in here? Because you're still at a lower low. This could come up here and keep calming down, but it's not a area of what you really want to get in. You want to get in at this lower high. So now, say we did get in at this lower high up here at this close of the grain. Ratio. Look at that. You're already there. See if it hits. Boom. Hit again. Create a new lower low. So your area, your first part of the strategy, again, is you're waiting for highs and lows. You got a low, right? So now if you got a low, you're probably looking for either a reversal up or a continuation down. But the only way you're going to know that is if you go through your steps to really know what's going on. So you got a high, then, okay, what happens with this high? Got a higher low under the EMA. People are stepping in, people are making moves. Doesn't really look like it's gonna keep pushing up. Otherwise, you would have got a higher low above the EMA. Higher low under the EMA. Boom, crosses down, makes a low under another EMA 200. That's pretty strong. Okay. Another confirmation, rejection. Ooh, all right. Goes down, consolidates, passes the orange line. Get in. Even if it doesn't make a move like a shift, this is a great area to get in. Once it closes under the orange line, it's a perfect area. This is a 1-to-5 ratio. Off of this, off a close off the orange line. And what you would want to do is get in off a close off a green candle, or what's even better, OP, is if you cross this orange line, you know it's got to come up. Now, where's it going to retouch? What's it going to make? If you cross an orange or anywhere down and make a low, you have to make a lower high. First lower high you see, that is bullish. Get in on the close. It's a 1-to-5 ratio. And that was the trade we took the other day on my road to 200K. Peace.